Joining us right now is global economics editor with the Wall Street Journal, John Hilsenrath. John, good to see you. Thanks so much for joining us.
Maria.
So, of course, the question becomes if China is going to buy more, $200 billion more in soybeans and agriculture, natural gas and oil, what is the U.S. giving up? What do you make of these developments?
Well, it looks like when you look at China and also North Korea, we're at this point in these negotiations where, it looks like there's some friction between both sides. One day you get some evidence that they're moving towards some kind of agreement. The next day you get some evidence that they can't overcome their differences. Today is a can't overcome their differences moment.
Well, we haven't heard a lot about this meeting in Beijing, Dagan, and then the meeting with the vice premier this week. That's when my radar is up in terms of what went on here and what the U.S. is supposed to be giving up if, in fact, China is going to agree to this $200 billion. And now China is saying we're not agreeing to it.
Again, that's part of the trade negotiation, but I would say that any infighting among the trade advisors and the economic leaders within the White House, not helpful. But we kind of knew when that delegation was in Beijing, when they left and said nothing. You knew, like we just know instinctively in our gut, just no understanding human beings, that there were problems afoot. I think that one of the critical issues, and we've talked about this a great deal on this show, will be the Chinese demand of lifting those sanctions on that telecom giant owned by the Chinese government, ZTE, that the language out of the White House has seemed to back off of it a bit. They're more saying we'll look at it. But I think that you do need, to quote Commerce Secretary Wilbur Ross, to separate the two. Because, again, if you're going to the negotiating table with North Korea, you just pulled out of the Iran deal, you need to remain firm on sanctions. And this is punishment to ZTE. It's punishment for selling U.S. technology to Iran and North Korea, to name a few countries, but it's also then not punishing their employees. That was the fine and the punishment on ZTE for doing that very thing. Those two need to remain separate. China wants to use it and put it on the negotiating.
Yeah, I mean, as I understand it, what's done is done with ZTE after the president's tweet that he's not going to change his stance again on ZTE, but China wants this whole idea of the 301 national security issue off the table, John. And are we giving in to, this push by China to get one of the only leverage pieces off the table when the China is just saying that they're going to buy $200 billion of more goods? I mean, it might look good on paper, but you're giving up a big deal if you get out of the national security issues.
Yeah, I mean, I think the other really important issue here is that $200 billion number that we keep talking about. What I wonder, and what we hit at in a story in the Wall Street Journal today, is whether we're setting ourselves up for failure by coming up with some kind of agreement that the Chinese are going to buy another $200 billion worth of goods and services from the U.S. Our exports to China as it stands right now are around $200 billion. So we would have to basically double our capacity to export to China. Our biggest exports right now are things like aircraft, soybeans. We've got some liquefied natural gas. Take aircraft. There's a few $1 billion a year from Boeing in sales. In order to get to $200 billion, we would have to massively ramp up our ability to send planes over there. Right. And they've already got a 7-year backlog at Boeing. So that $200 billion number it's a tough target to reach. And, I don't know if we're setting ourselves up to failure if we come to some kind of agreement.
Which is why, as you just referenced, trade experts are telling the Wall Street Journal American farms and factories won't be able to produce enough exports to meet the plans to cut the trade deficit with China by $200 billion. Your thoughts, Mitch?
Yeah, and what I'm also trying to figure out, and John, maybe you can weigh in, is sort of in the rock, paper, scissors game of all of these things, what's really the most important thing? So if you're sitting down negotiating and there are things you can live with, things you can't live with, obviously it's a good headline number that there's $200 billion worth of stuff, but is intellectual property the most important thing? What is really the most important thing?
Exactly right. That's the point I'm making. You give up on national security. You give up on the threat of we're not going to allow this because of the intellectual property theft and the transfer of technology. You just gave up everything.
And we're becoming a services economy. Matter of fact, we have a trade surplus with the world as it relates to services. And we're not really a goods-making economy, so intellectual property is really important to the future of trade, not only with China. So are they going to make that a centerpiece, John?
What I haven't figured out here is, in terms of American priorities, are we focused on principles or are we focused on targets? You know, targets is you've got something like a $200 billion number. You say, you know, our $375 billion trade deficit with China is too much and we have to shrink it. You know, so that's one thing, and it's potentially hard to reach those targets. Principles is these other issues that we're talking about.
Right.
The Chinese steal our intellectual property. We're not going to allow that to happen anymore. The Chinese put up barriers to our financial services firms or our auto sector. We're not going to allow that to happen anymore. You know, it seems like they've allowed the negotiations to get caught up in this targets issue.
Right.
And what we really need to focus on is the principles. What are we going to stand for?
And there's nothing in this $200 billion deal that addresses that at all. You've said this from the beginning, that the trade deficit is not the most important issue here. And this is something that the president has focused on. But we've seen economic growth with trade deficits.
The trade deficit is not a debt to China. And by the way, we can shrink the trade deficit if we just buy less from China, quite frankly.
Right.
But trade is so complicated that you can't message it on Twitter. And so the $200 billion concession from China, which was the president's demand, that's why, again, he likes a big round number rather than getting into the nitty-gritty of telling China, you're not going to steal our intellectual property anymore. You're going to stop the predatory behavior. We're not going to let you essentially steal from U.S. companies and put our national security at risk, which is, again, when you put ZTE on the table, we have to wait to see what comes out of that. But you do open up the United States to espionage, even greater espionage by China.
And they've been stealing through espionage now for decades.
Right.
So that's also on the table here. And China is not addressing this.